The Originator Connect Network, the nation's largest producer of mortgage events, is about fostering a community founded on professionalism, collaboration, and personal and professional growth, connecting you to the story of your success.
Welcome to The Interest. I'm Mike Savino. We all know that refis have basically dried up with 7% interest rates, and the industry has turned to purchases to make up for it. But as a company, how do you best support your loan officers in this new environment? Our own Christine Stewart talked to Andrew Pohlmann of Guaranteed Rate to find out what tools his company is using to help loan officers in this topsy-turvy market.
There's one thing to do with, expertise and hard work, but technology is a big piece of how we're supporting loan officers in this purchase-heavy market.
Helping loan officers market themselves is a big part of how Guaranteed Rate is using technology.
But our whole goal is to help them drive revenue, help support their purchase business, which we all know is almost everything today, and candidly to create a kind of better quality of life for them.
The technology system Guaranteed Rate has in place allows loan officers to manage their contacts and manage content.
And that tool then allows them to either set up automated messaging that we help manage for them, and it could be something as simple as a birthday campaign that reminds their referral partner that they did a deal with in the past, that one of their consumers is have a birthday coming up.
But for all the technology that exists, it's still a people-focused business.
Because when it all comes said, when it's all said and done, that agent, that referral partner, financial advisor, builder, whoever it is, they're doing business with a human, with a person.
Pohlmann, who has been in the industry for decades, says he can't say whether retail is better at the moment than wholesale, but Guaranteed Rate is a retail-centric company. He says loan officers who focused on refinance are going to have a really tough time in this market because it's purchase-focused.
Those that aren't maniacally focused on supporting loan officers' purchase business are going to have a really, really tough time. And there is no refi business right now. Now, we're also, which is interesting, helping consumers understand that through some great messaging, that even though rates are high today, make sure you think of us a year from now, maybe it's less, right? When that refinance traffic comes back again.
In the meantime, Pohlmann recommends loan officers get back to the basics.
Getting in your car, right, and driving to real estate agents and introducing yourself.
For the Mortgage News Network, I'm Christine Stewart.
Thanks, Christine. Of course, shifting to a purchase business gets a lot harder when confidence hits a new low, at least according to Fannie Mae. Fannie Mae's Home Purchase Sentiment Index fell for the 8th straight month, this time by 4 points. It's the lowest the index has been since Fannie started tracking consumer confidence way back in 2011. Only 16% of consumers think that now is a good time to buy. That's compared with 80% who say it's a bad time. 2 reasons consumers are becoming pessimistic: rates and income. Fewer people think mortgage rates will come down in the next 12 months. At the same time, a growing share of respondents say that their household income is significantly lower than it was just a year ago. One last interesting note from the survey: more than a third of consumers expect prices to drop, and that's causing a battle with sellers. We'll have more on that after the break.
Don't miss the largest regional mortgage show in the nation. The New England Mortgage Expo returns to Mohegan Sun in Connecticut, January 12th and 13th. See us at www.nemortgageexpo.com. Start your year with the best connections in the industry. Dozens of sessions, scores of exhibitors. It's where success is written every hour. www.nemortgageexpo.com.
Welcome back. As we just mentioned, more and more buyers think prices will come down over the next year, but sellers are remaining stubborn, and that's causing an impasse. A new report from Zillow says that nearly half of buyers think prices will fall significantly. That's a higher share than even Fannie Mae's survey. And more than a third of buyers think that they should wait for rates to come back down before taking out a mortgage. The problem is 4 out of 5 sellers think that they'll get a bidding war for their homes, and nearly the same amount think that they'll get more than market value. This stalemate is causing the median home to stay on the market for 54 days, and 1 in 4 sellers has to cut their asking price That's the highest rate since 2018. We'll be right back with what else is interesting today.
The Originator Connect Network, connecting you to the story of your success.
Welcome back. Here's what else is interesting today. Well, there may be one person who's happy for the Fed's recent rate hikes. It's whoever wins this record-setting Powerball. That's because the jackpot, now at $1.9 billion, is paid out in an annuity that factors in the average rate of return. Of course, that's only if you take the annuity. If you opt for the smaller lump sum payment, you get a paltry $929 million. For more on these and all of today's top stories, go to mortgagenewsnetwork.com.